Welcome to Platts Commodity Pulse. I'm Richard Swan, Managing Editor of Oil News in Europe, the Middle East and Africa. Today we are going to take an in-depth look at the Platts Top 250 Global Energy Company Rankings. Now running for 10 years, the rankings compare the biggest companies from the different corners of the energy world. Though it comes as no surprise that integrated oil and gas companies dominate at the top of the list, the rankings also reveal some of the longer-term shifts underway in the global energy market. Joining me to assess the rankings in depth are Ross McCracken, editor of Platts Energy Economist.
Morning.
And Robert Perkins, London News correspondent.
Hi.
Ross, I think one of the most striking things about this list, I look at it and it's very long, it's got oil companies, exploration companies, refiners, gas companies, electric utilities, coal miners, but right at the top of the list, big oil companies seem to dominate this list. They're the household oil names.
That's right. I mean, the Platts ranking spans 10 years now, and I think it's very much been the decade of big oil. Because when these rankings started out, we were in a period of mega mergers and consolidation, and in an oil industry where prices were at rock bottom. I mean, only a few years before the rankings started, we were looking at $10 a barrel. So we had Total created out of Total, Fina and Elf. We had ConocoPhillips come together, Exxon and Mobil, Chevron and Texaco, and BP buying into US companies. And we see those companies still at the top 10 years later. And I think it's a validation of that strategy at the time, a defensive strategy, has paid off over those 10 years.
And Robert, these companies, we call them integrated oil and gas companies, that they cover an awful lot of ground, and they're sort of, although they're registered in one country perhaps, they go all over the world.
Yeah, it's interesting. There are still big oil and gas companies there. One of the big drivers, obviously, oil commodity prices, oil and gas prices over the last few years have been very strong. That's going to keep them there. One interesting omission, and no surprise, is BP, due to the Macondo disaster last year, had to post a big loss. Therefore, it fell out the rankings and went dropped all the way down to, I think, 100 and something. Interestingly. But certainly, oil and gas companies, integrated energy companies, the big companies have their fingers in a lot of pies, and they are there, with due to the asset value and the oil prices and gas prices. One thing they have not performed so well on, over the last few years is refining. Their downstream is a big part of the operations. That's something that, despite weak economics, a weak outlook for refining markets, they've still managed to stay up there. So that's something that will be interesting looking forward, where they can hang on to that.
Yeah, that weak refining sector, we've heard a lot about this from the Western oil companies, I mean, particularly in Europe, but also in North America, is that right?
Right, yeah. In terms of the geography, I mean, we've seen a huge downturn in refining economics. Obviously, after 2008, we had a huge fall-off in demand from traditional big fuel markets, the US and Europe. And so we have a downturn in demand. We have an issue of a number of export-orientated refineries in Asia that have taken up some of the traditional the markets that the European refiners used to have. And we also have a huge wave of, in Europe at least, and the US, environmental legislation, fuel specifications, all things which add cost to refiners. And we've seen a structural shift from the oil majors to really get rid of their less profitable plants and shift towards more upstream, more profitable businesses. And the contrary to that being that you have in Asia, where you have a really strong demand still for products and fuel. You have some interesting refining economics going on there that has kept the sector going. I mean, in particular of note, I think in the list is Reliance, and the Indian refiners have been very strong, and they've moved up the list, just showing that how much the local demand can really support the businesses there.
That's right. I mean, you have European refining virtually in crisis, refineries being sold or closed down because they can't find buyers for them. You have refineries being sold in the east coast of the US in particular. Yet in the Platts ranking, 3 of the fastest growing companies are Asian refiners. And to have that contrast of closures in the OECD, essentially, but these companies, there's up and coming.
Well, which ones are these?
Well, there's the Saudi Rabi company. I think it's the second fastest of the fast-growing refineries. SR Energy, which is actually listed in the UK, but is essentially an Indian company. And the third one is Thai PTT. And they're, as Robert said, they have the ability to take advantage of the local market. But in Saudi Arabia's example, this is an export refinery. It's exporting its products into Europe, into the States, into markets worldwide, and that is putting pressure on the European and the US refineries.
Very interestingly, the rise in Asian refining seems to be mirrored in other sectors as well. When I look at this list, the top 250, there are a lot more Asian companies in there now than there were 10 years ago.
That's right. There's been a huge increase. In 2002, which was based on 2001 financial results, you had 45 Asian companies in the top 250. You now have 70 companies, so it's a huge increase. Where the companies that have dropped out have tended to be in the Americas, where you've seen quite a large decline in the number of North American companies represented in the list.
Interesting also the numbers that show that although the Asian companies have grown, Americans companies have fallen. In Europe, it hasn't. The growth of Asian companies, not the expense of European companies. The number of European companies has actually grown. I mean, what are the main drivers behind that? I mean, is it privatization issues? What's that?
I think there is a certain amount of consolidation in Western Europe, but if you split Europe between Western Europe and Eastern Europe, almost the entire growth comes in Eastern Europe, and there are a number of processes which are happening there. First is the emergence of Russian companies. You now have 15 companies in the top 250, which is a huge uplift from 10 years ago. Now these are obviously the big Russian oil companies such as Rosneft and Lukoil, who you'd expect to be there, and of course Gazprom. But you also have, more latterly, as a result of Russia's electricity privatization, the emergence of big Russian power utilities. And I think there are 3 there now, such as Rushydro, and 2 of those are actually amongst the fastest growing companies on the list. It's not clear that they can maintain that, because power markets tend to be very regional and very sort of country specific. But the fact that they're there is interesting.
Yeah.
But also outside of Russia, a lot of the East European states have thrown up 1 or 2 very big companies. And in Poland, which is of course the EU's 6th largest economy, you have 5 companies in the top 250, a couple of vertically integrated power utilities, 2 refiners essentially, and a gas company.
And 10 years ago they weren't there.
I think there was only 1 Polish company there 10 years ago.
Okay. When you look at the sectors, big oil dominates the list, as we said, and I should add, it would dominate it even more if the big state-owned oil companies of the Middle East were on the list, let's be honest. But the growth rates, when you look at the growth rates of the oil companies, they're very low. There's almost negative growth in some cases. They're barely growing. The industries like coal particularly, but also the natural gas sector, they've grown a lot faster over the last 10 years, and the predictions are that will continue. Should we expect to see more companies from these sectors coming into this list? Robert, what do you think?
Yeah, all the predictions really point towards an energy future where you have a bigger role for natural gas supplies and coal in Asia. You know, no surprise that a lot of the Asian electricity demand is being fed by coal to take a bigger slice of the pie. But gas is an interesting case in point. You know, you have a number of unconventional gas sources now that have really boomed. Obviously, U.S. shale gas being the prime example. And the predictions are that I think the gas will take up about a quarter of the world's energy demand by 2030. From a position of around a fifth currently. So it'll be interesting to see, I think, which companies can benefit from that, whether or not it'll be the oil majors, the integrated oil majors, which will have the first mover advantage. I mean, they have already taken a number of positions in US shale gas, or whether you'll have some independents. For example, in the US, Chesapeake Energy is a good case in point. We've seen that move up the list recently, able to tap into as a first mover to imply new technology to really benefit from this boom in a new energy source. So I think that'll be something interesting going forward.
Yeah, I mean, it depends to a certain extent on your exposure to regional markets, because gas is still much more of a regional sort of energy commodity than coal or oil, for example. So when you mentioned Chesapeake, it's fascinating. It's jumped from 202 last year way up to 66 this year, but it's done so in the US market, where you have intense gas-to-gas competition. You have the lowest gas prices in the world, yet it's still managed to increase its asset base and its revenues and rise up the rankings. So I think that's demonstrates the power of new technology for those first movers. And all over the world we have situations where people are looking at shale gas, particularly Poland, South Africa, China, Argentina, you've got to ask the question, is another Chesapeake going to emerge in these shale gas plays?
Well, let me put you on the spot then. Who's going to crack this top 10? I mean, looking at the oil price this year, barring some miraculous collapse in the next 2 months between now and the end of the year, it looks like the average oil price this year is going to be set for a record. Surely profits of the top 10 on this list are just going to go up and up, aren't they?
They are. We're going to see record profits in 2011. There's no question about it. Average oil prices in the year to date have been higher than in 2008. We may not have had that record $147 a barrel, but the average price has been much higher, and that's going to show when it comes to profits and revenues, and indeed the asset base of oil companies. So I don't think anything can crack the oil majors' dominance of the top 10 next year. But we do have, in terms of growth, we have other companies in the shale gas sector, particularly Chinese and Indian coal companies are very interesting, who are going to deliver much more growth over the coming year than the oil majors.
Yeah, Ross, I agree entirely. Obviously, the strength, I think, for oil and gas prices is going to support the integrated oil companies over the coming years. We can see the way that's happened over the last 10 years alone. We've seen the combined profits of the top 10 integrated oil companies double to 179 billion US, which just shows what impact that can make on their earnings. Going forward, what else are we going to see in the sector? I mean, in terms of the structure, something I'd like to see, and something we've seen a little bit, is the move to renewables, and companies splitting off green tech or green supported businesses. For example, Enel Green in Italy. And a number of companies. We may see a trend where perhaps integrated oil companies that they've pumped a lot of money into renewable fuels, biofuels. Perhaps if they can start to stay on the road 2 feet, these businesses, they might spin them off and become listed. Perhaps some time until they get the sufficient size to be on the 250 list, but that'd be something to watch out for, I think, for sure.
All right, well, thank you both very much for your insight today.
Thank you.
I think that's all from this edition of Platts Commodity Pulse. But for a full look at the rankings and some more analysis behind them, please do visit our website at top250.platts.com.